I think we're going to kick things off now, giving it a couple of minutes. But good morning, everybody, or good afternoon, depending on where in the world you are. I know we've got a bit of a mixed bag today from people all over the world. So thank you all for joining. We haven't done one of these for a while with Joseph Mews. We were doing regular monthly webinars. We had a little bit of a break over the summer, and now we're back, and it's an amazing way to come back with a special guest today from Sekhon, who are a developer who we've started working with recently with our two new launches that we're going to discuss today. And we've got none other than Tanzil Sheikh, who's a big part of that business, head sales director and head of asset management for the company. And so it's been a great privilege to be able to organize this alongside Tanzil and obviously my partner in the business, Andrew Siegel, who's based in the UK. So what we're going to do is we're going to do a little bit of an intro about Joseph Mews and who we are. I know we've got some people on the call that are familiar with us and who we are, but there's some that aren't. So we're just going to run through that very quickly. But then the main point of this is obviously to introduce these two new developments, two fantastic projects that we're super excited about at Joseph Mews. One is called The Halcyon and one is called The Pointe. And Andrew, my colleague, is going to run you through those. And then we're going to have a bit of a Q&A session with Tanzil at the end from Sekhon, from the developer, who's going to answer some questions. So on that note, during the presentation, there is a Q&A box at the bottom. If you would like to ask any questions, then just pop them in there and we'll make sure that we answer them at the end. So without further ado, let's get things rolling. If we can go to the next slide, please. And the next one. Again, look, for those of you that don't know us, Joseph Mews were founded in 2001 originally by the gentleman that you see on your screen there, Andy Foote. Andy founded the business based on his own experience as a property investor and basically through an experience of not great customer service through his journey. When you're buying a property as an investment, especially when you're overseas, but as well as if you're in the UK, it can be quite tricky knowing who to deal with, from A, finding the right property, B, dealing with things like mortgages, lawyers, renting the property. And so the whole concept was finding quality products that we could offer clients all around the world, as well as a slick process where you can make the whole journey of buying a property as easy as possible. That ended up with us working with some huge developers in the UK, the Sekhon Capital Group being one of them, and delivering £854 million of property portfolio. So 2,500 clients we have around the world, and that was the start of our journey. And so if we keep going through the slides, one thing that we're always advocates of, and we always like to mention whenever we do an event or a webinar, is where our name came from. It's people often ask, are you called Joseph? Is the founder Joseph? Well, no. Joseph Mews is actually the name of our office. It's a Mews house in Birmingham, one of our offices. And it's named after the son of Andy. And Andy's been an incredibly successful man in his career in real estate. But he'll always tell you his biggest success is what you see on the screen in front of you now, the Brain Tumor Charity, which is the largest brain tumor charity on the planet. And that was founded by Andy over 20 years ago now. And he founded it because his son, who was named Joseph, tragically got diagnosed with a brain tumor and passed away aged just 9. When that happened, he started a foundation in Joseph's name, which has turned into the Brain Tumor Charity, which is, as I say, the largest on the planet now. So it's an incredible story of what he's achieved. And obviously, we wanted to pay legacy both to Andy and to Joseph when we created Joseph Mews. And so that's where our name comes from. And so we always ask, and we'll always send it around, for any support for the charity is obviously hugely appreciated from all of us at Joseph Mews. Next slide, please. So to go back to figures in terms of what we've achieved so far, 36 developments from a residential side, forgetting the commercial, £594 million worth of property. And it's a large track record. And that's really important that that you're dealing with a business that has done this many, many times. It's not just about finding one block. It's about being able to facilitate that in the entirety of that process, particularly when you're buying off plan and you're buying something literally off a floor plan, and you're having to go through the whole motions of paying a deposit, getting a mortgage, going to completion, renting it. It's to do that 3,500 times is obviously something we want to shout about, particularly with clients all over the planet. Next slide. So coming on to this, and obviously we're welcome to with lucky to have Sekhon to welcome on the webinar today. We work with various partners, and the whole premise of what we want to do is only work with the best, to work with developers that we can trust, to work with developers that we work exclusively with, and that we know aren't going to let our investors down. And that's really important, particularly for investment property. That can be one of the most time-consuming parts, is saying, oh, there are all these properties everywhere for me to invest in, but who do I go with? And that's our role with Joseph Mews, is partnering with people with great track records that we know we can trust. And we're going to obviously come on to that with regards to the Sekhon Group later on. Next slide, please. Again, we've talked about this, the process. It's not just finding the property, it's the exchange of contracts with lawyers, it's the customer care, it's the handover, completion, after sales. Joseph Mews deal with everything. And that's a really important point. We're not just an agent that says, thank you for purchasing with us and good luck. We deal with you from the infancy all the way through to 5-10 years down the line, when you want to buy more, when you want to sell what you've got, when you need help managing a portfolio or restructuring how you're financing it. You always come to Joseph Mews. We'll always be a port of call. And that's really important to us as a business. We have built our reputation based on having clients that repeat buy with us and want to build portfolios based on not only the products themselves, but also the process. Next slide. Yeah, as mentioned, any questions, obviously put them in the box below. Next slide, please. So why invest in the UK and the current UK property market? And obviously, we'll come on to something more relevant, but this is an important point. I know a lot of you have joined here today because of the specific projects, but some of you may have joined to sort of, get an idea of why you should invest in the UK. I think the first point to mention is that the UK is the most invested market on the planet for foreign investment. It's number one, more than the US, more than Canada, more than Germany. It is number one. And the reason that it is number one is for the following. This graph represents the trajectory of what's happened over the last 60, 70 years, but also the resilience of the market. This is something really important to point out. And one thing I always go back to is, if we look at the last few years, I mean, everything that could have been thrown at us has been thrown at us. We had Brexit, which originally affected the market in recent history. That was the referendum for Brexit, then Brexit being implemented. Then we've had COVID, we've had inflation, we've had wars, we've had interest rates rising. But look at where the market has gone and look at where it continues to go. We were sort of, media had told us that it was going to be doom and gloom at one point. Property prices were going to slash. No one's going to rent property. Of course they are. And the reason they are is because there's an undersupply in the UK. There is not enough property. It's a growing population and it's getting worse. It's compounding year on year, this undersupply. So that allows it to be resilient. And if we go back further and we look at 08, 09, the recession then, if you had bought a property at the height of that price in 2008, your friends, your family, your colleagues would have told you, unlucky, that's a bad move because it's about to crash with the recession. Well, yeah, it did. But look at where it is today. 10 years on, you had already made a huge return on that property, but you supposedly bought in the worst time of the market. So that's what's important to remember here. We're not buying something to make a return in the next 2 to 3 years. That's not the strategy with property investment. The strategy is mid to long term, 10 years and above. And you will, as the graph shows us, you'll always make money from it, because even if it fluctuates, even if it goes down, the trajectory is always positive. And so this illustrates that really well. And that's generic. This is, on a UK generic basis. And obviously we look at areas that's even stronger. Next slide. Right, we have a poll question. Let's hope technology doesn't fail us here. So it should come up on your screens. It has on mine, so hopefully it has on yours. The first question is, what is your biggest concern when investing in UK property? So if you just tick one of these, and then it's good for us to know and obviously come back to at the end. So just give you a few seconds on that. All right, that should be more than enough time, I'd hope. Okay, so we've got a bit of a split mix here. So the biggest one, empty periods when no one rents. Interesting. And then second, market prices going up and down. Well, we just talked about that. They do go up and down, but it's about the mid to long term. Managing the property from afar, again, as I've mentioned, that is something that is the cornerstone of property investment, that we realize is having the tenant in place. So wherever we build, and obviously with relevance to the Halcyon and the Pointe, we've obviously always done this. We have agents on the ground that we always speak to before anything, so that we know these are who are going to manage and handle the rentals. So that's important. And the void periods, again, it's one of the biggest strengths of the UK is coming onto this screen here. If you look at top left, JLL have forecast that there's going to be 610,000 homes shortfall in the next 5 years. That's over 500,000 homes short. That's a huge amount of homes that we are in deficit of. So when we talk about rentals, the one beauty of the UK market is that you don't get void periods. As a property owner myself, I've never had a void period of more than 2 days of any of my properties. And, you know, we talk about Andy, our chairman, he's owned properties for 30 years and he's had multiple. He said his biggest void period was 2 weeks. And that was only because he was doing renovation works in one of his apartments. So that is one thing that is very strong about the UK. If we go through to the next couple of slides, you'll see, I think there's some press here. Bottom right, renting, average homes now has 25 tenants wanting to view. You know, for anybody that's rented in the UK recently, I've you know, lived in London a majority of my life, and renting a property there. I mean, you go and view on the day, and if you don't reserve it on the day, then, you know, you're going to miss out. That is how extreme the rental market is, because there's not enough property and there's huge demand. So void periods is certainly not something to worry about. Obviously, looking at more relevant, you know, we've looked at the graph over the years, but now looking at sort of relevant to where we are in the market now, projections are positive at the moment. And the reason they're positive is because of interest rate cuts. Obviously, inflation has been brought down. And what's following now, we obviously had an interest cut down to 5%. It's now been held at 5%. But the projections are that this will be down to 4%, at least or latest by the end of next year. And obviously swap rates are going down as well. So from a mortgage perspective, all of this pent up demand is coming to the market now. And that's why everyone's quite bullish about the market. And on the back of that, obviously, we see prices rising in the next 12 months. Again, optimism, there's optimism in the market, which is a welcome change. And again, this is all sort of stuff that's in the media now. And from the reports from JLL, Savills, Knight Frank, the big consultancies are all bullish about the next coming years. Next slide. So tips on maximizing your ROI, your return on investment from your UK property investment. If we go to the next slide. Oh, before the next slide, we've got another poll question. Question 2, which factor is most important to you when choosing a property to invest in? So if we get those answers up. So we've got location, we have rental yields, we have capital growth potential, we have entry price, and we have tenant demand. Look, all of these are important. I guess some different investors of ours look at different things, and it's interesting to know, especially from the audience now, what that sort of emphasis looks like. Is it more from a rental yield perspective, or growth, or tenant demand? So if you can put your votes in. There we go. Right, rental yield, location, capital growth. So rental yield is number 1. I think that sort of plays nicely to what we're talking about today, which my colleague Andrew will come on to. But if we look at these kind of points before I hand over to Andrew, we look at the right location, which is obviously what we're talking about today. We're going to explain why the location of the Pointe and the Halcyon is so fantastic. We choose the right off-plan development and developer. Obviously, we're with the Sekhon Group, amazing track record, big developer, really well respected in the market. Low entry point to maximize rental yield. Again, really in point with what the votes have just said there. Lower capital values tend to equal higher rental yields. And that's certainly what we've got with these 2 projects. Obviously, these second tier cities are getting more and more expensive. And obviously the yield potential comes down with that. But with a high rental market and lower capital values in your third tier cities like Leeds and the periphery areas, these are where the rental yields are performing so well. And that's what we're going to talk about shortly. Leverage financial tools, obviously taking mortgages. The majority of our clients take a mortgage. It's not something we're going to discuss today. It's something that if you'd like to discuss, you can get in touch with us. We work with brokers who will give you a free consultation and understand what your options are. Whether you're based in the UK, South Africa, Dubai, Hong Kong, wherever you are, you will have mortgage options. And so if you'd like to understand what they are, then let us know. 90% of our clients take mortgages, and they're people all around the world. So you will have more options than you might think. Freehold ownership is a big point, which Andrew will come on to. Amenities is something in the market, again, very relevant with the two projects we're talking about today. There's been a shift in the working culture in the UK. More and more people are working from home or doing a hybrid role, at least a couple of days a week. And on the back of that, they want bigger units, which is the next point, and they want amenities. And that's something that doesn't exist in the market from a buy-to-let perspective. It does from the build-to-rent investment, which is the next point. Build to rent are when a fund essentially puts money into building a development and you can't buy it as an individual. So they're basically building it to take the return. Obviously, based on the fact that they're doing this is based on, huge demand from a rental perspective where their investors' money are going to provide a steady, consistent and high yield. But you as an individual investor cannot buy it. And what are all the build to rent schemes doing now? They're all building big apartments with amenities because that is what they trust. That's the lowest risk and that's the highest return. So on the buy-to-let market, it doesn't exist extensively, but it does with these two projects we're going to talk about now. And that obviously plays on to the long-term capital growth. So that's my first part, kept it to just about 15 minutes. And I'm going to hand you over now to Andrew, and I'll come back on at the end with some questions.
Thanks, Johnny. Some really good information and detail there, which I'll build upon. Just to say, we'll have a little offer which will run to the end of the month, which we'll come on to later. I'm just going to do a couple of slides and then I'll hand you back to Johnny and Townsend. We'll have the Q&A session. If I could have the next slide, please. Thank you. So what we were talking about earlier really is as investors, we want the lowest price point. We want the best predicted capital appreciation, and we want the high rental yield. So it's all about the maths. We want to have, as investors, we want to have our cake and eat it. And by going further north into the areas that we're developing in now, we've done Liverpool and Birmingham's in the past, but here we're focusing on what has historically shown we believe will give the best capital appreciation and the rental yields. Because you could just look at the slide that Johnny presented earlier, you could stick a pin anywhere in the map and say, well, it doesn't really matter. Property prices have doubled, which is true over, as we saw, 12, 13, 14-year periods. But we can do better than that. If we can get 1.5% more in terms of capital appreciation and rental yields, then it's making a big difference. So, which is why we spend a lot of time doing research. If I could have the next slide, please. We work with investors globally, of course. We have a lot of investors in London. 76% of investors living in London are investing further north. Again, low price point, good capital appreciation, strong rental yields. The maths makes sense. If I could have the next slide, please. So I'm going to talk about the areas. We've got two developments. We're in and around Leeds, Bradford, Wakefield. I want to show you why we're working in those areas and the benefits and what's happening in those areas in terms of regeneration, employment. We know there's a massive shortage, but again, the areas that we're developing in have a huge shortage, but there's a lot more to come in terms of regeneration, which all adds to the capital appreciation. So if I look at Leeds, for those maybe not familiar with the UK, for our overseas joiners today, we're sort of just in northeast, just slightly north of the Midlands, close to Bradford, Manchester and Wakefield. If I could have the next slide, please. So if we look at Leeds, we do a lot of research and we can share all this data with you. We want to look at the potential. So we've got a nice average property price, affordable, relatively affordable, 241,000. And again, strong price growth predicted over the next 4 years and strong rental growth predicted over the next 4 years. As I said, John has explained all about the supply and demand dynamics. And that's really what's driving this. In the UK, we've never have in decades built the number of homes that we should be building. So if you look at your JLLs, your Knight Franks, all the big PLCs, they're predicting strong capital appreciation and strong rental yields. And Leeds is a massive financial and professional sector. Got 320,000 individuals contributing to sort of 20 billion to that economic output. So again, next slide, please. It's all these elements, if you like, that make a big difference. It's not one of these things. It's the whole puzzle, if you like. And then in Leeds, you've got world leading employment with your KPMGs, your Ernst Youngs, your PwCs, Channel 4 are relocating there, Sky. You've even got the University of Leeds, and that's got 4,000 staff there alone. So fantastic opportunity when there's already a massive shortage of property. Next slide, please. Again, we've got the Bank of England are expanding their northern hub, and Channel 4 are moving in to make Leeds the new media city. Next slide, please. And again, what we want to see is there's in these areas, there's a lot that's happened. There's a lot that's happening at the moment in terms of regeneration, and there's a lot more to come. New homes, new jobs, new city parks, extension of the financial district, which is already large, 6,800 square foot of retail and leisure space, developed in a green and carbon efficient way. And again, there's from the levelling up side of things, there's more money, there's more funds coming in from central government to improve things like the mass transit system. So again, it's got all the fundamentals that we're looking for in terms of that rail, road and transportation links. Next slide, please. Or from a tenant point of view, our sort of demographic is the young sort of city centre professional, 26 to 36 years old. We don't necessarily rent to a lot of students, but in a lot of the areas that we're working in, there's big student retention. So in Leeds, it's about 12,500 students a year leave university, get jobs in the areas that we've just talked about, and they're obviously looking for rental property. So that education, that university support is really good. It has a big impact in terms of, or is adding to the housing crisis that we've got in the UK. If I have the next slide, please. And again, we talked about roads and rail. We've got Leeds Bradford Airport. So you've got a strong road, rail network. And again, massive with this northern powerhouse. You've got money coming in from central government, which is giving more jobs, putting more people within that sort of commuter belt area of Leeds. Next slide, please. Something we talked about, Johnny talked about with sort of facilities and commuting. We're seeing more people post-COVID really that want to be close to the city centre but don't want to live in the city centre. Yes, of course, you're going to get people that do want to live in the city centre, but here we're seeing, particularly in Leeds, on average in the UK, most people are commuting 1 hour each way to work. So they want to be in a good location, they want facilities, and they don't necessarily want to be in the city centre. If I have the next slide, please. And we talked about, or Johnny touched on, home working or hybrid working. So again, from the Office of National Statistics, the more you're earning, the more you're hybrid working and the more you're working from home. So if you're earning up to £10,000 a year, you could argue that might be more of a manual job. You're commuting sort of 86% of the time. It's very little home working. If you go to the other end of the scale, £50,000 or more, 80% of people on £50,000 or more are working from home, and that leads to wanting bigger houses, bigger apartments, more outdoor space, and more facilities. If I go to the next slide, please. Okay, so let's have a look at our new development, the Halcyon. So I'll show you the map and the location where it is at the moment. Low price point. This is in Bingley, so it's Leeds commuter belt. We've got prices from £165,000. It's off plan, as Johnny mentioned, so you put 20% deposit down. 20% deposit is your commitment. You'd exchange on 20% in around about a month, 5 weeks time. Average rental yields, and I'll come on to rents, short-term lets and long-term lets in a second. The average rental yields are a minimum of 7%, and we're completion on this will be Q4 next year, so end of 2025. As you can see from the building there, there's actually 2 blocks. We've got 3 launches, and you've got that sky walkway which connects the 2 blocks and all the amenities which are in the development together. If I could have the next slide, please. So we talked about that, the area where we should be looking to invest, and this of course is slap bang in that area. It's a 24-minute commute on the train to Leeds, 16 minutes to Bradford, and it has its own train station. So you've got the natural beauty of the area, which is where people want to live and want to be, but it's a short commute for those that need or want to work in Bradford and Leeds. I'd like to have the next slide, please. We touched on amenities and these build-to-rent developers. So the banks, Marks and Spencers, Debenhams, and pension funds and investment funds are building these build-to-rent schemes. So they're building them, they're not selling them, they're renting them out and making money themselves or for the pension funds. And with these, and we're seeing tenants wanting these extra facilities. And not only that, on average, the build to rent type of schemes, where you have the bigger units, where you have the facilities, on average, you're generating 30% higher rental yields, which is really important. So the house, and we've got fitness studios, yoga studios, private dining, events lounge, etc. Most of the facilities are free to use for the owner or for the tenant, and there are serviced offices, outdoor cafes, which have a charge, and they're a guest suite. What's a guest suite? So if your tenant has someone staying, they can book a guest suite and someone can stay, so they're not all sharing the same apartment. So very much facilities that we're seeing that today's modern tenants want. And again, as I say, that's the way the world is going, particularly with the build to rent developers, and it will get you quite a lot more in terms of extra revenue, extra yield. Can I have the next slide, please? Again, there's a picture of the development. We can just sort of rack through some of the pictures. We've got the outdoor cafe and outdoor space, an indoor lounge there, lots of communal areas, really nice, high quality specifications, large windows, the facilities, you've got all the white goods, all the flooring. We help with furnishing lettings and all the other elements you can think of, whether it's a short-term let or a long-term let. So really nice sizes, nice location. We've got the cinema. That's one of the sort of the public spaces there as well. We have concierge facilities. We're seeing people like a concierge, so there's someone manning the desk there 9 till 5. You've got communal dining areas and event spaces. You've got the sports area as well. So very much facilities that are being demanded by today's modern tenants. And then you've got an outdoor shot of the development itself, so you can see the building overlooking the rugby and the cricket pitch there as well. So beautiful setting, commute about, close to your Leeds, your Wakefields, your Bradford. So perfect location. I have the next slide, please. Oh, thank you. So we talk about lettings. This is a local letting agent, and they're saying that we'll get a 7% gross yield for the development. And again, we've got cash flow summaries. I think we're being quite conservative there because of the location, because of the sizes, because of the facilities, but we're happy to hang our hat on a sort of minimum 7% return. We also work with SA, serviced accommodation, and short-term let partners. So again, we've got cash flow summary, so we can share all this details with you. So we can very much drill down into not only the gross returns, but more importantly, the net returns after things like mortgages, fees, charges, furnishing, stamp duties, mortgage fees. We can show you good net positive cash flows. And again, we can set up calls and run through all these, run through the maths in more details with you later on. Next slide, please. Okay, so that's the Halcyon. I'm going to talk about Wakefield, actually in the city centre itself. Again, if I can have the next slide, please. Again, a lot of data, but average property price, 233,000. Again, what we want to see as investors, strong forecast in terms of capital appreciation, rental yields, massive shortage of stock, easy access to Leeds. And Wakefield itself, I think, while it's obviously very close to Leeds, looking at the Wakefield market, I think most of our tenants will probably come from the Wakefield market. But again, you're probably 30, 40, 45% cheaper than Leeds, but a short commute. So we're appealing to a much sort of wider demographic. I'd like to have the next slide, please. Again, you've got Card Factory, you've got Team 17, which is a massive multi-billion dollar turnover game software company. So again, Leeds is just 13 minutes away with the major financial centre, but we've got all the names and all the jobs locally as well. So we've got the local market to rent, which is very much undersupplied, and we've got that Leeds commuter belt market as well. I have the next slide, please. And again, regeneration, shopping, the 2 train stations, you've got Kirkgate there as well. So you've got 2 train stations in the city, and that's had upgrades to the transportation and to the rail network. Again, it's all these, next slide, please. It's all these things that just add to the story. And very well connected. You're only 13 minutes for Leeds, and you've got all the key amenities in Wakefield itself. Like on the next slide, please. And again, you've got a very strong sort of cultural and lifestyle there, and very close to the Peak District. So it's a very an attractive place to live in its own right, with a lot going on. If I could have the next slide, please. So let's look at the next development, which is the Pointe. Just 37 apartments here. We've sold about half at the moment, and we've only sort of really just launched. Similar to before, in as much as 20% deposit is required. That will be due in about a month or so ago. And as Johnny mentioned, we can help with solicitors and anything you need to get you up and running. Strong average rental returns. Rents in Wakefield went up by 7% last year, went up 7% the year before, and they're predicted to do the same again. And we're Q1 2026 for completion, and work has started on both projects. And as you can see, if I have the next slide, please, we've kept the facade of the building. It's a nice sort of Art Deco building, and a very sort of beautiful looking building. And then again, we're in that, hardly a triangle, but we're in that space that we talked about earlier, where we're seeing the best returns in terms of capital appreciation and rental yields. And again, close to Leeds, Bradford, Bingley, etc. So perfectly located in the northeast of England. If I could have the next slides, please. Thank you. So again, that shows you it's sort of on the corner there. So beautiful building, and again, walkable to all the facilities and both train stations in Wakefield. Again, we spent a lot of time, as Towns will tell you, with the CGIs to make sure what you see on the CGIs is what's delivered. And as I say, we'll be having the furniture packs to match as well for those that want to go down that route. So you've got meeting rooms. Because we want to keep the service charge at a reasonable level, there's 37 apartments here, 140 odd in the Halcyon. So we've got less facilities here, but you're in the city centre. So you've got a gym, you've got a lounge, and on the right-hand side there, you've got the co-working space. So all amenities and facilities that the tenants can use. And there's an option as well for the landlords, for the owners, to buy a storeroom. So that can be quite nice when you've got an apartment. All space, all extra storage is handy, and that can be quite a nice little addition to the investment as well. If I could have the next slide, please. Thank you. So I'm going to hand you back to Johnny, and he's going to introduce you to Tanzil from the developer and go through the next stage and some Q&As with the developer. Thank you.
Thanks, Andrew. And yeah, hi, Tanzil. You've been patiently waiting, listening to myself and Andrew ramble on. But no, thank you firstly so much for joining. Obviously we've met a fair few times now, and we've been talking about doing this for a while, so it's great to get it in action. Look, before I sort of ask you a few questions, I think it kind of explains everything on here. We talked about your guys' track record and what you've completed so far. And obviously you'll see some numbers on there. You've delivered obviously 1,011 apartments already, 267 commercial units. Is there anything on there that you sort of think's best to point out?
I think that is really, if you just look at the top line, 1,011 apartments and 267 commercial units. I think that should give everyone an idea in terms of our experience of what we do in terms of property development. Those 1,011 apartments are spread over all across West Yorkshire. So that's buildings in Bradford, Leeds, Wakefield, Huddersfield. And you know, it hasn't happened overnight. You know, this is 20 years of us mastering our craft in a sense, to get to a point now where we can have developments such as the Halcyon and the Pointe. So yeah, that's one thing I really wanted to mention.
Yeah, 100%. And I think, look, from obviously getting to know you guys as a developer over the last, well, couple of years now, I think that one of the points here is the unwavering commitment to quality. That's what we've obviously loved about working with you guys. When we have, obviously Andrew's been through the CGIs and what we're, you know, together kind of designing and building with these developments. It's something special. It's not just your sort of run-of-the-mill property. It is something that's going to stand the test of time and separate itself from the rest of the market. And finding, you know, like-minded sort of vision there, I think with Sekhon has been great. And yeah, it's testament to you guys. So look, focusing a little bit more on the actual two projects that we're discussing now. And again, sorry for everybody, if we are going to do a Q&A at the end, do ask any more questions. We've got a few, but if you want to ask anything at the end, then please do write it in the box. Specific to the Halcyon and the Pointe, what's the vision behind these two? Obviously, we've seen the pictures, but from your side, let us know what's kind of the vision from Sekhon's side.
The vision, Johnny, it's really all is about delivering high quality accommodation. There's a common misconception about West Yorkshire and the North in general, that the properties and buildings that we have aren't as good as what you might find in London, in Birmingham. And really with the Pointe and the Halcyon, what we're trying to demonstrate that really isn't the case. You'll find most property developers, there's a cliched saying that they only build developments that they would live in themselves. I think we can safely say with the Halcyon that we'd all love to live there with the amount of amenities, the size of the apartments. You know, we're ranging from our smallest apartments are sort of 750 square foot. Our biggest are in excess of 2,000 square foot. So what we're really trying to create is something unique that, you know, it will like you say, stand the test of time. You know, these are really the first kind of developments that we're putting up for sale. Our usual strategy has always been about building and retaining, because we know our buildings, we know they have high yields of return, we know they go up in value. So now it's really, you know, we've always have, whatever we do, our first goal is always to have that backup plan of, in the case we decide not to sell them, you know, what can we run them ourselves? And any development that we choose, we always need to tick that box first. So with the Halcyon, with the Pointe, we know they're going to be high quality accommodation. We know they're going to rent out. We know the yields are going to be high as well. And most importantly, they're going to go up in value over the 10, 15, 20 years time span.
100%. And yeah, look, I think that kind of leads on to, you know, a question that we've been asked about what sets you guys Sekhon apart from everybody else. But I think, you know, from what you've just said and what we discussed earlier, it's really that quality, right? And the commitment to the quality.
Yeah, it's look, we take our time. You know, we don't rush into anything. The design element of the Halcyon has been 2 years in the making. You know, even when obviously we looked at creating the CGIs with yourselves, we were very sort of, you know, focused on it's got to look like what our vision is. And the thing is that those things can only come with time. You know, we started our property development journey 20 years ago. You know, we've made the you know, the rookie mistakes of buying a building and thinking it doesn't need a new roof, and in 6 weeks you bring a new roof on it. So, you know, we really have mastered our craft to get to this stage, which is, I think that's what sets us apart. That, you know, we haven't rushed into this. It's years of experience, knowing what the market wants, and then being in a position now to say yes, we can deliver it.
100%. And you said it takes time. These things don't happen overnight. And that, starts with the selection process of locations, right? It's not, we're talking about the, building the properties and making them look as beautiful as obviously we want them to look from the architectural designs. But how do you go about selecting the locations for where you're going to build?
We listen to the market. If you look at our portfolio, it consists of a variety of different avenues. We've got residential, we've got student accommodation, industrial, offices. So we keep our ears close to the ground. We are within West Yorkshire, so we know where the tenant demand is. We're always conscious of overdevelopment, mainly because we're normally the cause of it. But what we try to do is look at the locations. What is it that we need? If it's a city center location like the Point, but we know the amenities that need to be there. The Halcyon is very, very unique because we're competing with the build to rent sector, which is, it's advancing in Leeds. So we needed to create something that sets us apart because there is a lot of development in that area. So it's just always about keeping your ears close to the ground. We're very fortunate that we already have 1,100 apartments under management. So we know the right time to put the rents in. We listen to our tenants. So we have a very good sounding board to know what the next step is or what our next development should be. One of the other things to point out is we're quite lucky in West Yorkshire because we have an array of weird and wonderful buildings, ranging from disused mills, churches, old office buildings that really allow us to kind of, our CEO, Sekhon, his passion, is around bringing disused buildings back into use. He's Bradford born and bred for the last 50 years. So it's always a labor of love, every building that we choose. And, nothing makes us happier when we can take an old disused building and transform it into something special like we've got with the Pointe and the Halcyon.
Yeah, I agree with that. And it's obviously like paying homage to the history of the developments as well has been great. With the Halcyon having the beautiful stream running through it, naming it after that tranquility, the Victorian conversion with the Point. I mean, they're beautiful buildings really. And obviously the design and the historical kind of relevance to it as well is something I know you guys are passionate about, which is amazing for us, as well as the tenants living there, right? Living somewhere that is iconic. These two developments will be iconic in those areas because of what they consist of. And, with the Halcyon, we talk about, future proofing. And I think that's kind of something that we, you'd agree on with the level of amenities in the Halcyon. This is looking to the future and what people are going to want going forward, because investment isn't a short-term gain, right?
No. One thing I'll say about the amenities, we've been monitoring the build to rent sector for a number of years now. And one thing that we've learned from looking at the developments is that renters will pay a premium for amenities, and what it's basically created is that these amenities, they're no longer a novelty, they're becoming a necessity. And it's inspired by, across different parts of the world. I mean, in the UAE, Johnny, where you're based, if you have now a development being built in Dubai or Abu Dhabi and it doesn't have a swimming pool or a gym, it's criminal, because that's what the renters want. And we're seeing the same thing here now in the UK. Renters will pay extra because they want the gym, they want the co-working spaces. People want extra space where they're living. It's no longer just about having a 450 square foot apartment, and they spend a lot more time with the space that they live. That's part of the reason is because of obviously post-pandemic working habits have changed. We know the Labour government is even mandating employers to give a hybrid work solution. So this is just going to continue on and on. So these developments now, that's where the future proofing comes in, because we're ahead of the game, we're ahead of the curve, because we're already putting these amenities in. So which means that when the investors buy these products, the renters will come because they have something that other developments don't have right now. And I think that is one of the key selling points here.
Yeah, for sure. I mean, we obviously, our ear to the ground from an investment point is always speaking to the local agents and saying, what is the typical sort of demographic, or what is the typical profile of the person that comes into your agency? What do they want? And more they're telling us more space, amenities, because it doesn't exist. And that's what the market dictates. I saw the ONS, Office of National Statistics said that last year, 44% of the working population in the UK are working from home at least a couple of days a week. And when you go over to the £40,000 and above brackets, those numbers go up to 60 and 70%. That's a huge amount. And so it's been a massive shift. It's here to stay. And obviously that dictates what kind of property people want. And obviously what we're obviously, or what you're building with the Halcyon, the Pointe, that's at the forefront of this kind of new demand. So it's really exciting. I'm going to invite Andrew back on the call now. We're going to do some Q&As with him as well that have been sent in. And so I'll adjudicate this. But look, I think for everybody on here, one question, Tanzil, that we always get asked when you're buying off-plan property, and it's been asked a couple of times in the chat, is about commitment to completing properties on time. Obviously, look, we've worked in this industry for a long time. You know, how do you ensure the quality and also timely completions? We know that some things can be outside of the developer's hands, but is there anything that you can kind of reinforce here from your side?
I think just to reiterate the point that we've been doing this for 20 years plus now. So in those 20 years, we've built up a network of suppliers, contractors, tried and trusted people that we know can deliver on time. So I think, the proof is always in the pudding. If you say Q4 2025, that's what we're aiming to. But I think, like I said, Johnny, this is something that we've been planning meticulously for a number of years to deliver on time. So I think that's where we're a bit reassured that even though we've got two developments going on at times, two different teams that are working on it. So we've got the Build for You property group working on the Halcyon. We've got SK13 Construction working on the Pointe. These are all suppliers and contractors that we've used previously. They've always delivered to us on time, which then gives us the confidence to set those timescales and allow you guys to kind of forward that on to your investors.
Absolutely. And I guess sort of playing onto that, as another couple of questions have been about the funding of the developments, and obviously peace of mind that when you are buying off plan, the developments themselves are actually funded, right? Because often it sounds obvious, but often they aren't.
So yeah, we're fully transparent. The development's being funded by Hampshire Trust Bank. People can look them up. They're not a small financer. They finance some really big projects. And we've got full finance for the build. We've got some reserves as well, because obviously, the developer, you always need that fine line. So yeah, it's pretty much everything in hand.
It's really important that, and it should give listeners here that are looking to invest a big peace of mind, because it is something that unfortunately isn't always the case, with investing in off-plan property, that sometimes, they aren't as sort of well funded as we are in these situations. Another question that we've got.
Yep, sorry, go on.
No, go on, Tanzil.
No, I was just going to ask, if anybody ever wants to do a tour, we'll give them the hard hats, the high-vis jackets. We'll take them around. They can see the construction in itself. One of the things we agreed with Joseph Mews is we're going to be sending regular monthly updates, so you can see the building coming alive. So, we're always fully transparent in that.
Absolutely, and that's something, we've really appreciated from the start with you guys. One of the questions I've got, which is quite has been asked a lot, and I've worked offering investment property for over 10 years now, and I can say that since offering the Halcyon and the Pointe, the Halcyon's obviously we've been offering a little bit longer, so particularly with that, I've had this question more than I've ever had it with any other developments, and that is, can I use it as my own residential address? And obviously people have seen how amazing it's going to be, and people are looking at this not just from a lock up and rent out kind of investment strategy, but maybe I want to live in it at some point. The answer to that question that we've had, can I use it as my own residential? Absolutely. This is when you're buying the property, you're not buying into a share of the property, you're not buying into anything else. You are buying that specific unit 1, 2, 3. That is your unit. If you want to rent it on a long-term lease, you can rent it on a long-term lease. If you want to rent it out, short-term for a month or whatever it is, you can do that. And if you want to then not rent it at all and use it yourself, you can. So we will always assist with both sides, with the rental, both short-term and long-term. And obviously, if you want to use it yourself, you're fully within your rights. So so that's a good point to make. Andrew, one for you here about you, because you touched on it in your presentation about the service charges. What can one expect to pay given the scale of the amenities available for both developments?
Yeah, thanks, Pavan. It's an important question because we're talking earlier about nets and grosses, because obviously that's going to affect your bottom line if you're an investor. So the service charge works out about 1% of the purchase price. So in real money, it's probably about £2.50 per square foot. So it varies on the size of the apartment. I think a couple of things that are really important. We've got a lot of facilities in there. A lot of those facilities are low cost or no cost. The high cost facilities are things like concierge. So we're not having 24-hour concierge. It'll be a 9 to 5 concierge. Out of hours, it'll be an app with AI. So we're keeping the costs down. The gym is another cost, but a lot of the other spaces in areas are little or no cost. Some of them as well are revenue generating, like the coffee shop, the guest suite, and the actual serviced offices. So you can have a proper, like a Regis style serviced offices. So any profits left over will go back to the owners because it's a 999-year leasehold, but the developer, Sekhon, are giving that leasehold back to the owners. So that gives a lot of power, a lot of control. And of course, it means there's no ground rent as well. Back in the day, there was, problems with some developers would sell the freehold on. The leasehold would go to like a pension fund and prices and things would escalate. So we're experienced, the developers experienced, so we put all these sort of safeguards in place. If you can vote with your feet, so if you weren't happy with the block management company running the facilities, then you could change the block management company. So Sekhon are experienced in running those kind of things, and it will be a sort of a second, a third-party company running the block. But there are a lot of safeguards there as well, and we're keeping those charges to a minimum. So hopefully that's helped answer that one, Pavan.
Perfect. Thanks, Andrew. We've got another question here about whether it's best to invest as an individual or as a company. And look, this is really relative to the individual. And what I'd suggest is you book in a meeting with either myself or Andrew, and we can run you through that. To give you a sort of just brief synopsis, if you're based overseas, most 130 countries in the world have a tax-free allowance with the UK, or double taxation agreement, I should say. So you get a £12,500 allowance. So often as in my own personal circumstances of being a resident in the UAE, it's better for me to buy in an individual name because that tax allowance obviously benefits me. If you're in the UK or you've already got an income in the UK, often it makes more sense to buy through a company, because rather than paying income tax or adding this to your income tax and putting you into a high bracket, you pay corporation tax, which is only 19%. But again, we're not tax advisors, and we would obviously encourage you to have a conversation with one of us about your own personal circumstances, and then we can advise you through our different partners on that. So so let us know. Andrew or Tans, I mean, what assurances do we have for our down payment in case the project does not happen or it's delayed? Andrew, do you want to take that?
Yeah, I think then you're putting the 20% down. Obviously, it's in everyone's interest to get it finished as soon as possible, because putting it brutally, the developer doesn't make his money until he's delivered it. So it's all hands to the pump to get that delivered, so you can get your 80%. 10% of that is protected, so you've got that protection. You could argue 10% is at risk. However, there's a real asset. So you've got something like a unilateral charge. So there's a real asset there in the building. So you've got a level of protection with the funds being in stakeholder. And if anything were to happen, you've got that asset there. I think the key thing is, as Johnny mentioned, we've delivered sort of 3,500 units today. Everyone has, we've completed on everything. Everything's gone through okay. And that's our responsibility as well, to make sure we get you a mortgage, we get you over the line. So we've done our due diligence, so we're as comfortable as we can be, and you've got those little fail safes in there should something untoward happen.
Anything you wanted to add, Tans, on that, or has Andrew covered it?
Yeah, I mean, Andrew's made one of the good points that he's made is obviously both developments are permitted developments, in the sense there's already an existing building there, so we're not building from the ground up. So in the worst case scenario, which will never happen, if we don't deliver on it, there are certain protections that that you can obviously go around. The other thing to note is obviously both developments are funded to development finance. So you know, all of these things only happen when we promise an exit of how we're going to pay the funder back. So there's a lot of things in play, and I know a lot of investors don't realize this, that a lot of due diligence is done on us as a developer, on our finances, on our track record, you know, before these funders, you know, give us the money. In a sense, you know, the Halcyon project is close to a £20 million build. Now, you know, they don't just give that to Joe Blogs. So there's obviously a lot of due diligence has been done by the banks to allow these developments to happen, which should give your investors a certain confidence that we will deliver.
Absolutely. Thank you both. You've definitely answered that one. We've had a couple of questions on mortgages as well. And look, I'm not going to go into it. I'm aware that we're about to hit the hour mark. With mortgages, as I mentioned, you know, 90% of our clients do take mortgages. So again, if you are looking to buy with a mortgage and you want to understand what your options are going to be relative to individual units within either the Halcyon or the Pointe, then just ask and we'll book that consultation in for you. And it's an important conversation because one thing I've noticed being overseas for a while and offering investment property in the UK is perhaps people aren't aware that they do have those options. You might think you need to raise the full £190,000 to buy a one bed in the Halcyon, but actually you need to raise a deposit rather than the full amount. So it's worth having that conversation. I think lastly, I think Andrew mentioned we had an offering for those of you that have taken the time to sit on the webinar. And that offering is it for anybody that reserves before the end of this month. So where are we? 25th. We've got 5 days left. You will get £500 towards your legal fees, which is a big chunk into that. So that is an offer. You'll be sent it for those of you that have attended. That's £500 towards your legal fees if you reserve before the end of the month. So lastly, I just want to say a massive thank you, firstly to Andrew, but most importantly, Andrew, not putting you down here, but for the special appearance of Tanzil. Really appreciate your time. It's been great to have you on board, and you know, I think having the developer actually talk investors through things is quite rare. Actually, often you only hear from the sort of master agent or the agent, but to actually hear from the developer themselves is great, and it should fill our investors with a lot of confidence. So thank you very much for taking the time.
Anytime, Johnny. Thank you for having me.
Thanks, guys. Appreciate it.